Hi, this is Ant from Your Property Network magazine. Here we are, and today we're talking about something slightly different. So YPN is normally known for kind of residential property investing, buy-to-let investing, developments of varying scales. But today we're going to talk about something a little bit different and something it's quite an important time to be talking about this. So I'm joined by Kirsty Darkins, who is a real expert in the commercial property field. She comes from a professional background, which she'll perhaps talk about a little bit in a minute, and has built her own portfolio of commercial properties as well. So welcome to the call, Kirsty.
Hello, Ant. Thank you for that introduction. I'm glad to be here.
Okay, so commercial property investing right now. So where we are right now, you know, if we were to believe the kind of mainstream press and I guess, you know, logic in many ways, we would think that commercial property investing would be possibly commercial suicide right now. We know that many more people are working from home. A lot of offices are sort of downsizing, downscaling, and we hear that the sort of retail sector, which has been struggling for a number of years, has probably been hit harder than most. And the hospitality industry and pretty much everything now we talk about it. So is it really all doom and gloom? So today we're going to say, is it really all doom and gloom? Are there opportunities for commercial property investing? And if there are, what are they? What do they look like for us, who maybe those of us who might be moving across from buy-to-let investing, residential property investing? So that's quite a lot to cover in 10 minutes.
It is. Yeah, that's a lot of questions, but yeah, we can have a go answering them. What I would say is that there are always opportunities, and the commercial market is adapting, as it always does, to whatever happens in the economy. So far from being suicide, it's actually a very smart thing to do at the moment, as long as you know what you're doing, so you get some professional support, and you buy the right things, which is really the same as in residential, but commercial is just impacted by different factors. So, you know, things are just accelerating that were already happening in the commercial market. So COVID's really acted as an accelerator for trends that were already there. So in retail, it's far from dead. So Amazon can't provide everything. I know most people think they can, but you know, you're never going to get your eyes tested, your hair done, convenience services, pharmacy, you know, all of that. That's never going to be done by Amazon.
Yeah, no, so Amazon's not cutting our hair or doing our nails and that sort of stuff.
Your convenience and service-led retail is still very strong in the right locations. Now, what does have to happen, because our shopping habits have changed and will continue to change, and this is what I mean by acceleration, everybody's gone online with COVID, is that retail needs to shrink. So there are locations where retail properties need to be repurposed because they're never going to work as retail in that location again. But a lot of the secondary retail, by which we mean smaller market towns, so not prime city centres, not prime towns, suburban parades in residential areas, they're always going to be needed. The other interesting thing that's happening is that, yes, everyone's decided that the office market is dead. Not true. So myself and some of my former colleagues and investors have been talking to their office tenants, and most of them agree that some sort of hybrid from where we were before is what's going to happen, and that the office is absolutely critical to culture within a business and team working. So what they're finding is that, yes, people are more productive having to commute less, but what they're finding now is the long-term impact of remote working is that their staff are telling them it's very difficult to work as a team. They're missing the culture, they're missing the social interaction. Not everybody wants to work from home all of the time. Not everybody's got the setup to work from home all of the time. It's not an ideal setup. So what we're hearing is that some operators are actually expanding. So it's sector led. So, you know, the travel industry, the hospitality industry, absolutely, they're coming out of offices if they can, they're downsizing. But a lot of the tech companies, environmental companies, everybody that's doing well out of this, there are winners and losers as they are in everything, are actually expanding their space because what they've decided to do is create more hot desking space and just more space in the office in general. So It's a mixed bag, as it always is. There'll always be winners and losers in the market. And what you need to do if you want to invest in commercial property is follow the business market. So you need to know what's happening in business and commerce, which industries are trading well, which industries aren't trading well, to choose your tenants wisely. And that's effectively where we are. Industrial is flying because demand for logistics is through the roof. And you've also got lots of people that have started their own businesses. What always happens in times of economic challenges, that people look to support themselves. And lots of people who have either been made redundant or have been on furlough have really put all their effort into their own businesses and started to grow them. They've grown out of home, and now they want kind of starter workshop industrial warehouse units up to the 5,000 square foot mark. So that market is very, very hot and investable at the moment as well.
Okay, it's really interesting because actually one of our other businesses, we've been looking to rent a sort of 5,000-6,000 square foot warehouse that we can convert. We've got a gym business as well, and it's really difficult to find anything.
It will
and the price per square foot and the rental figures are pretty high.
They're ever increasing. So, industrial is a really secure place to put your money in commercial at the moment, if you can find a deal that gives you the return you want.
Okay, well, let's talk about, I really love this idea of kind of a secondary retail market and a service market in terms of sort of market towns or suburbs and precincts and that sort of thing, because we see those shops, we're aware of them, we know that some of them have been there for many years. So what are the opportunities that we should be looking at, and what does it look like? Because I know if I was doing a sort of buy-to-let investment, I'd know I'd be looking for a slightly distressed asset, a flat or a house that I'd be buying, adding value to, with the intention probably of forcing the appreciation of the asset and refinancing to get most of my capital back out and go again. It's different in a commercial space in terms of the valuation. So what should we be looking for to start with, and how might we add value to that unit?
So the answer to both is it's all about the security of the income stream. So it's about the leases and it's about the tenants. It's not about bricks and mortar in commercial, because your valuation is based on how secure your income stream is. And the longer the lease and the better the tenant, or the more established the tenant, the higher the value of your property will be. So if I just give you an example of one of my investments, which is a good example of what you can look for, is I've got 5 shops in Newark, all on one title in a kind of block. And then we've got some upper parts as well that are development opportunities. So we're converting those to resi, and we'll sell those off. And effectively, in the end, it will give us the ground floor for free, because we'll get the value out of the resi. But the commercial itself, so I look for short leases and part vacant space. So, but I look for locations that are strong. So you haven't got lots of vacancy in the town. You've got lots of independent, smaller businesses. You talk to the local agents, you find out the demand, and they are convenience and service led. So my tenants in that location I've got 2 takeaways. They've done very well out of COVID. I've got a hairdresser, which actually I've only just let that to a hairdresser. So we had to let one of our previous tenants out of the lease for personal reasons. And I've just let it in this market to a hairdresser. And we've also got a home giftware and garden store, which is trading their socks off because everyone's doing up their houses. So those tenants also work with you better. So the big brands are the ones that have played hardball during COVID, not paying their rents, using the ban on evictions. The smaller businesses, this is their business. It's often run as a family business. It's their livelihood. They want to work with you. And we've only had we've only lost 1 tenant out of 15 in COVID, and all of our rents are up to date. No rent arrears.
Okay. Wow. I mean, that's amazing to hear in the very unusual times that we find ourselves in at the moment. So you're looking for maybe a mixed use building, maybe something where, not the whole of the building is being let or it's been underutilized. So you can add the value by bringing in a tenant into an additional part of that. Yeah.
Or short leases. So if you buy a commercial property and the leases are, less than 2 years, less than 3 years, you can't really finance it. You'd have to buy it cash. So I like to look for short leases. So I buy properties that other people might perceive as risky, but those tenants have usually been in situ for 5, 10, 15 years already. They're very likely to renew their leases. And even if they don't, the demand is good and strong in that location. That's your due diligence, and you know you can re-let it. So most of what I buy is to asset manage, and that means what I call paper exercises. So rather than any physical building work, I add value doing paper exercises. So renewing leases for longer terms, uplifting rents. So I'll look for locations where the rents are a bit low, and I can add value that way. Or I buy part vacant buildings. So I've got some cash flow from an existing tenant, but I've got the opportunity to add value by letting some vacant space. And so those are the sort of things you look for.
In that instance, would the purchase price that you're buying on be based on a multiplier of the rent that they've currently got going in, that they're currently receiving? And we'll talk very briefly about that in a second. A lot more details are in the magazine articles that we've done. We'll come back to that in a minute. So you'd be buying it on a multiplier of the current rent that's being collected, and then looking to uplift the rent through perhaps getting another tenant in there or increasing the tenant, and then forcing the appreciation of it because it's revalued on a multiplier of the new rent that you're realizing. Is that right?
Yes, but the multiplier will change as well. So if you're buying an asset that has vacant space and short leases, then the yield, the market yield that's used, the investment yield, the multiplier, is going to be different to when you've done the asset management, and that's going to impact the value as well. So for example, if I'm buying a part vacant or short lease asset, then I'm probably going to be buying it at about 12% as the market yield. Once I've done my work, then the market yield's going to go down to 9%. And because you're using it as a multiplier, that means it increases the value.
Okay, it would be really useful to have that as a sort of example so we can see what that looks like. So what would that look like in terms of the increase in evaluation on one of yours?
Yeah, so I'll do the one that featured in the YPN article. So it was 2 retail units on the ground floor, offices on the first floor, and then we've got a basement room at the rear and a small car park. The leases on the ground floor retail were really short, but it's a hairdresser and optician. They've been there for a really long time. And the first floor offices were vacant when we bought it. And in that location, it wasn't cost effective to convert the first floor to residential because the resi value is not really there. So we're holding it all as commercial. So I bought it for £87,000, and the rent at the time coming in was £10,500. So that's a 12% return on investment on buying it. Now what we've done is we've extended the hairdresser's lease for another 5 years, extended the optician's lease, and we've let the officers for £5,000 a year. I've also extended the lease of the basement room and increased the rent there. So our rent has gone up to £16,500 a year. It was 10.5, now it's 16.5. But the key is that because we've now got longer leases in place, it's now valued off a 9% investment yield, which gives us a valuation of £180,000. So we bought it for 87. It's a year later, it's worth 180.
Wow! And predominantly through
we've just added value by renewing leases and letting vacant space.
Okay, so it's a different proposition. We're not going in there and tearing the place apart and rebuilding it. This is a case of improving the asset without, as you say, on a paper exercise. So
yeah, we did a light refurb of the office. So we spent about £3,000 recarpeting, painting, putting a couple of small little kitchenettes in, just to make it fresh and nice, so we could get the rent out of it. So we spent £3,000 on works. That's it.
Okay, wow, it's really interesting that there genuinely are these opportunities out there at the moment, and it's a very short video today because your full interview that we did with you and the full article was within the latest edition of YPN, which I've got in front of me now, and we'll give a link for that in a minute. But it's really interesting to see these opportunities. Do you feel that most buy-to-let investors, most people who come from a residential property background, have a mental block when it comes to commercial property investing?
Yes, because it's valued so differently. And it's all about leases and tenants and not about bricks and mortar. And it's not necessarily about doing physical works, although that can be part of it if you're converting part of it. I think a lot of people think they don't really know where to start. So we all live in a house and we understand residential. And it, we kind of get the markets. Commercial feels a bit out of reach. I think a lot of people think you need a lot more money than you do to get started in commercial. So you need around £100,000 to get started in commercial, not $1 million, as a lot of people think. And it's just it's different, isn't it? It's business. It's not people. It's business. So yeah, I think a lot of people are afraid of what they don't know, but it's like anything else. Once you learn what you need to learn and you have the right contacts and professional team, it's just as easy as residential. It's all about, you don't know what you don't know.
It's very true. We use it all the time, that statement. It's almost become a cliche but just because it's so true. We don't know. We have a mental block. We just don't know that stuff. So, okay. So best place to start in terms of, I guess, sort of breaking down that sort of knowledge gap. How useful are the sort of commercial property agents in the area that we might be looking at as a resource? Because I know from my experience, they're very different to your residential agents. They've got a lot more qualifications behind them. They're normally some form of surveyor as well. So they're genuine sort of professionals, as opposed to some, and I do say some, of the estate agents that are out there. How useful can they be in helping us bridge that knowledge gap of understanding what the rents are, what sort of properties are in demand in the areas that we're looking at?
The agents are useful once you've got your base level of knowledge, because as you say, it's professional. So they're not going to work with you if they realise that you have no idea what you're talking about. So you can either go to them and say, actually, I just want to instruct you to acquire on my behalf because I'm a new commercial investor, and then they will hold your hand and teach you. But unless they're doing that, they expect you to have a clear idea of what criteria you're looking for and for you to understand what they're showing you when they send you opportunities. But yes, that you can use them to assess the market demand, to assess the market rents in a current market. They're very happy to share that information as long as you're a credible investor and can show that you have some knowledge about the commercial market.
Okay, brilliant. Well, this interview today is literally a whistle-stop tour of just an overview of it, highlighting that there really are some opportunities still in commercial property investing, and they're just changing.
That's right. It's just adapting, as it always does.
Okay, and we have to adapt, don't we? We're business people. We have to adapt to survive, and thrive. So, okay, so two ways to find out a little bit more. Obviously, we've done the full interview with yourself and the article, which went into, I think we did a whole lead article with a number of people on commercial property investing. And if you watch this YouTube video, or watch it on Facebook, or maybe on the YPN app, if you're not watching it on there, but watching it on YouTube or Facebook, you can get a copy of this completely free if you go to yourpropertynetwork.co.uk, and you can get your first copy free as part of a sort of trial subscription. All the details are on the website. And if people want to follow you, Kirsty, and learn a bit more about how they can work with you to bridge that knowledge gap, what's the best way? Is it via your website?
Yeah, via my website, which is just my name, so nice and easy, www.kirstydarkins.co.uk.
Okay, that's brilliant. Well, look, thank you for your time today. I know there's a lot of information on the website, on your website, about how people can, follow you and work with you in different ways. You've got some really exciting products coming out now aimed at helping people to sort of bridge that knowledge gap. So it's been a pleasure. I wish we had more time. I'm really glad that we did when we did the full interview with you. Yeah. I think today it's a taster to say, look, if you are interested in making the transition to buy-to-let to commercial, there are very real opportunities out there. And I'm literally going to go away and get the calculator out and start looking at commercial rents now. So it's been a pleasure. Thank you very much for your time.
Thanks, Anne.
Okay, you happy with that?
Yeah, good.
Yeah, I mean, it's a bit of a whistle-stop tour, but
it's just a taster, isn't it? It's just to get people interested. And then
that's exactly it. Yeah, that's exactly it. Brilliant. Okay, cool. Well, look, I'll leave you to your day and weekend. It's nearly the weekend, isn't it? So
yeah, nearly there. Nearly 1 o'clock.
Absolutely, yeah.
All right, good to talk to you.
Take care. See you later.
Thanks.
Bye.
Bye.